Robinhood CEO defends payment for order flow, says practice is here to stay. Yes, the boy from Bulgaria, Mr. Vlad Defends, has struck again, saying the exact same thing that he probably shouldn't be saying, most likely enraging his own client base. Robinhood CEO, the boy from Bulgaria, Vlad Defends, defended payment for order flow, also known as POF, saying it's inherently here to stay. That's not really defending the practice, it's just saying that it's here. POF describes the practice of routing trades through market makers like Citadel Securities in return for a slice of the profits. It is viewed as controversial because of the perceived conflict of interest it creates between the broker and client. Now, I'm no lawyer. I don't speak legalese, but I think it's pretty safe to say that we could cut out the word perceived conflict of interest. Very much seems like a hardcore conflict of interest, and that's exactly why it's banned in almost every other major market. Speaking with CNBC, Defends defended the practice of POF, saying that it's inherently here to stay. Payment for order flow is the practice of routing trades through market makers like Citadel Securities in return for a slice of profits. If I'm a business that's selling things and I'm generating transaction volume, the more you use it, the more money you get. Inherently, there's a conflict there because I make more money by getting you to transact more. So he's inherently saying that, yes, they use Robinhood to kind of induce people to trade even more, probably, which isn't good for them. I think it's important not to take the baby out with the bathwater. What does that mean? You shouldn't make revenue on transaction-based business. That's understandable, and I think the point has been politicized to some degree. Payment for order flow is viewed as controversial because of the perceived conflict of interest it creates between the broker and clients. Critics say that brokers have an incentive to direct order flow to market makers offering payment for order flow arrangements over the interests of their clients. Payment for order flow is banned in the UK, where Robinhood announced plans to launch on Thursday. It's also banned in major other markets, not just the UK. The US SEC had looked at banning payment for order flow in light of concerns surrounding the practice, but opted not to, while the European Union has imposed a blanket ban on payment for order flow. And then this is what Vlad had to say. If you look at equities, payment for order flow in particular, it's about 5% of our revenue. So a much smaller component of the overall pie if we're diversified the business quite a bit. So a couple of things to say here. First of all, if it's so small and it makes your clients so mad, from a business perspective, it shouldn't be that hard to get rid of it then. Like you yourself, you're saying it's a small part of the pie, and if it makes your customers mad, well, maybe get rid of it. There are brokers now who have commission-free trading that do not engage in payment for order flow. That is a possible, realistic business model. I want to be very clear about that. Another thing here is this concept of the perceived conflicts. Well, if you look at the world's major preeminent market maker like Citadel, it is a market making, but then Citadel also has a hedge fund. And I get it. If you talk to Ken Griffin, the founder and the CEO, he's going to be like, no. There is a clear communication wall between the two. But do any of us really believe it? And then the final point is, if you want to get into the nitty gritty of why is payment for order flow bad, it's because of this. And I'll tell you it straight up mathematically of why this is a negative thing. So when it comes to regulations and market makers and brokerages, we talk about this thing called the NBBO, the National Best Bid and Offer. And that's basically, are we getting an optimal spread between the bid and the ask? You want it to be as small as possible. Here's what they do. Market makers are saying, yeah, it's great because with payment for order flow, we're actually improving on the NBBO itself. So everyone should be happy. But in reality, many papers have shown this, that because of payment for order flow, the bid itself, the NBBO, the National Best Bid and Offer, the bid and the ask are already fictitiously widened. So basically, it's as if they created their own measuring stick and then said, oh no, we're doing good. And they're basing it off their own measuring stick. And on an individual basis, like individually for you, for me, does this like cost a lot of money? No. But when you add up portions of a penny over all of trading, we're talking about potentially billions of dollars a year. So between that, just really the perceived conflict of interest with, okay, you have market makers also running a hedge fund, and that gets a little bit wonky. Does Robinhood really care about their client, or do they care about who's paying them, as in someone like Citadel? So that's the perception of conflict. And also, Vlad has said it himself. The way their business model works is they would love to get their clients to actively trade more, something that most likely the average trader shouldn't be doing. The more you trade, probably better chance of you losing money. And yet he's even admitted himself, their business model is to try to really, not really dupe or trick, but try to entice people to actively trade more. I don't get it. This boy from Bulgaria, Mr. Vlad Tenev, he either has no PR team or the worst PR team ever, because anytime this guy pokes his head up from his wretched little hole, he says the dumbest stuff, the worst stuff. He does not understand the retail trading community. He does not understand his clientele. He doesn't get who he's servicing. And you could tell that from his commentary, where he always says the dumbest stuff time and time and time again. I don't get it. I truly don't understand what goes on in this dude's head at all. I think that it's a little bit early to tell. I mean, it's just been a few weeks, but we have seen some movement in the cryptocurrency markets. Of course, AI and technology stocks have seen a concentrated rally through most of the year. And, you know, we're seeing that our customers are continue to be resilient. So I think in the UK, we're really excited to see what the adoption will be like. We think that there's a ton of excitement, and when we go live, we think that there will be a really useful value proposition that we have to offer.
Can I ask you a bit more about crypto? I mean, it's becoming a very interesting space going into next year. Robinhood has been described as a crypto whale or a Bitcoin whale, thanks to a very large Bitcoin wallet. What sort of demand are you seeing ahead of the halving of Bitcoin next year and possible ETF story unfolding?
Yeah, I mean, Robinhood in the US has been a large and early entrant into the crypto market. And we've continued to build through the winter with our non-custodial wallet, on-ramping technology, and the improvements we've made in how we communicate our pricing advantage. Just like every other product I mentioned, from stocks and options to retirement, crypto for Robinhood has the same value to customers, the industry-leading economics coupled with great user experience. And we've been proud to see market share gains over the past year. And we think that that puts us very well positioned when we see rallies like this to add value to customers and to the business.
Market share gains are one thing, given the competition has been hit by various different regulatory probes. But what genuine demand are you seeing now as we look to close out 2023 for crypto products?
I mean, I think in the past few weeks, you have seen crypto prices going through a little bit of a rally. Generally speaking, when there is a rally, you do see retail investors jumping in and participating and trading crypto more. But again, we're not very focused on these rallies. It's really about making sure that we're building for the long term and continuing to improve the service quality, the customer support that we offer, continuing to innovate on behalf of our customers, and making Robinhood the best place to invest in the US markets, both for US customers and for the UK.
Market bets, though, are being placed around some sort of
He looks like a
spot
dude that just like
ETF
hates his
for
life.
Bitcoin next year. How do you stand to benefit from that, and do you think it's going to happen?
I mean, I think that a Bitcoin ETF is likely to be
watching this is
for
equal to supporting Adam
institutional
Aaron
adoption, because
by just
the
watching it.
infrastructure for institutions having access to this asset class has been limited and kind of difficult and cumbersome to integrate. So I think from that sense, we do expect it to be helpful. On the other hand, if you look at retail customers, which is the market that we serve, in the US at least, Robinhood has been making Bitcoin and other cryptos available directly at very
Does
low
anyone
cost
use
for many years
Robinhood
now.
for crypto? I feel like
I would be
over my
surprised
dead
if it
body
moved
would I use
retail
Robinhood
too
for crypto
significantly,
or
but
anything.
institutional perhaps is a different story.
It's been quite a year in terms of the fortunes of Binance and FTX, major players in the crypto space. What can you say about the wash-up of the regulatory problems and how it's impacted the sector in 2023?
I mean, I think that cleaning out some of the bad actors
Qs are getting hit.
over the
Nasdaq's
long
getting hit a
run
bit,
going
just so everyone
to
knows.
be very good for the industry. I think good actors that are continuing to push the industry forward and progressing in a compliant fashion, working with regulators, and protecting customers to the best of their abilities.
Why does he look so
really
dead in his eyes?
The necessary ingredient to making this asset class truly globally accepted. And Robinhood has been leading in that.
Accepted.
We've been working with regulators. We've been very prudent about assets that we offer, not offering lending and other sort of risky.
The Qs just hit a new
difficult
intraday
propositions.
low.
And I think you're seeing the fruits of that as other players that have been unscrupulous, to say the least, are falling away.
Just
He
wanted
is
to
one
ask
of
you
those
about
players.
AI in terms of Robinhood itself. What technology are you seeing at this point on the AI side that can
unscrupulous
change
players.
the way
That's him, dude.
retail trading, retail investing takes place?
Yeah, AI is a very transformative technology. I mean, we've encountered several platform shifts over the past few decades. The previous large one, which was the rise of mobile, really gave birth to Robinhood in a way. I mean, in our space, mobile has been the fastest growing segment in the US at least, and in the UK with the launch. We believe that'll continue. Robinhood has solidified its position as a leading mobile broker through that platform shift. And I think AI stands to do something even more transformative. I mean, really, if you think about it, human beings in any business and any offering have provided intelligence, and there's lots of areas where technology can't fully automate everything, where humans have been filling the gaps. So as these AI systems become more and more intelligent, and we should expect that to continue to follow a curve similar to Moore's law over time, you should see more of the things that have traditionally been done by humans augmented by machines. And Robinhood has many teams working on this. Of course, we're very pro-human. We believe that there's always going to be a role for humans to provide a higher level service.
For a robot.
But I think we're very excited about the potential to do more for customers and deliver more products and services at higher quality. And I think companies that are early to that stand to benefit tremendously. I think as a technology company, Robinhood's perhaps in the best position out of anyone in financial services.
I doubt it.
So Robinhood is an AI stock, just to be clear.
Robinhood is a consumer company, technology company, and we'll make use of any technology that's available to improve the product and the lives of our customers. So I think in a sense, 5 years down the road, every stock will be an AI stock, in much the same way that technology stock has almost lost its designation. I mean, if you're not using technology in this market, are you really doing anything that matters?